I know you've seen all the advertisements, you've seen all of the different videos online talking about how much money you can make day trading, how you can become rich day trading. Well, nobody ever talks about how you could possibly lose a lot of money, or the idea that you should really be focusing on how much money you can lose off of every single trade before you're focused on how much money you can make. It's a simple idea that we're going to talk about in this video. The idea that you have to be able to lose day trading before you can make money day trading. I know, it sounds crazy, but if you just give me 5 minutes, maybe 10 minutes, we're going to talk about it here in this video. So make sure you stay tuned. Is this thing on? What's going on, guys? Patrick here. Today, we're talking about this very simple idea that you need to be able to lose before you're able to make money day trading. Now, that might sound like a very crazy idea because you're probably seeing all the ads, you're seeing all the day trading courses, you're seeing all the videos online of people just making money. And it looks almost too easy, too simple. And that's one thing. If it looks too easy, it looks too simple, it probably is, and there's probably something going on behind the scenes. So obviously every single trade that we take, there's a chance that we might lose. Now, when I first started to day trade, I would basically just get into a trade. I would think about, oh, I would make so much profit. If this stock just goes up 20, 30 cents, I'm gonna make $300. And to me, that seemed like a lot of money at the beginning. But the problem was, I just wasn't able to accept that I'm risking money to possibly make $300, and my mindset was always just focused on how much profit I was going to make. And one thing that I've learned over the last 2 years of really this day trading journey is that if I get into a trade and the first thing that I'm thinking about, the first thing that comes to my mind is that, wow, I'm gonna make a lot of money on this trade. If that's the first thing that comes to mind, well, there's probably a much better chance that I'm gonna lose a lot of money. So a really good example here is QD. The other day, I had QD for a short. I was looking to short into the 550 resistance, and my stop loss would have been, 560, 570 area, knowing that that resistance was there. So my goal was to risk 10 cents. I'm risking 10 cents for the chance to make 30, 40, 50 cents on this move. Hindsight's always 20/20 when it comes down to it here. And I look at this trade now and I'm like, wow, I really blew it because I only made $200 where, the stock ended up going and doing exactly what I wanted to. Because I actually ended up shorting there at 540 because I didn't have the patience to really hold on for my entry that I really wanted. I didn't have the patience. So I ended up going short there at 540. The stock ended up pulling back down, I ended up covering, and then the stock bounced off the 550 resistance and then crashed down there to $5, just like I had planned. Now, you're probably asking yourself, okay, cool, you had a plan, it didn't work out, you still made money, green is green, which is great, right? Green is green. But the idea here is that I was going into the trade already with the idea that I'm risking 10 cents. I'm going into the trade thinking about how much money I'm going to lose. So that's one of the big things that I think really any day trader, a beginner, an intermediate day trader, an expert day trader, it's really one of the things that every day trader should be thinking about before going into a trade. It's something that I need to work on, something that I need to focus more on is really defining my risk for every trade. You might see a trade where I jump in and I make 20, 30 cents, but there was also a chance that I could have lost much more. And what happens is, like I said, you go into the trade, you end up in tunnel vision where you're just like, ooh, all you see is profit. All you see is your target. The stock's at $5, your target is $6, and all you can think about is the stock is going to 6, the stock is going to 6, and you train your mind, the emotions are flowing, your heart is beating, and you're excited. You're really, really excited because all you can think about is that profit. All of a sudden, the stock starts to go down. So now you entered at $5, the stock is now at $4.50. And all you can still think about is it's gonna bounce, it's gonna bounce, it's gonna bounce, and you tell yourself it's going to bounce, it's going to bounce. So again, you're reaffirming the idea that the stock is going to your profit target, and all of a sudden now the stock is at $4 and you're locked up. You're like a deer in headlights, and trust me, this is a personal experience. I've done this. You can see the live streams where I've done this before, where I enter a trade, I have my profit target, and all I can think about is, oh my gosh, I'm gonna get rich off this trade. And as soon as the trade goes against me, I just lock up and I don't think about cutting it off. I'm not looking at what's going on. I'm not looking at the indicators. I'm not looking at the support. I'm not looking at the volume. I'm not looking at really anything that matters. And that's the big problem, personal problem. And I think people out there also have that same problem because, you know, if it wasn't a problem, people wouldn't be losing money like they lose. Because I see this comment a lot from people, you know, they go, oh, I bought this stock, it's crashing, I don't know what to do, I've lost a lot of money, should I sell it? If you're asking that question right now, it's probably a bad idea because you probably should have been cutting it off much sooner. Because if you're just now realizing that you've lost a lot of money, that's probably not a good time to be asking other people if you should sell the stock that you've lost money on. But that's beside the point. Really, I think what it comes down to here is if you're a beginner day trader, if you're a novice day trader, if you're trying to become a better day trader, something that I'm also working on, I'm going into the trade with the idea, okay, I'm shorting at $5.50. My loss is gonna be $100 to $200 because I'm gonna cut it off if it gets back up there to the 560 area. And that's all I should be thinking about, managing my loss, right? How much money am I going to lose on this trade? If I enter this trade right now, if I enter the trade, how much money could I possibly lose? Where is my stop at? Instead of only focusing on the profit target, instead of only thinking about how rich I'm going to get, I need to change that mindset. I need to be thinking about how much money could I lose? And that's really what it comes down to. You have to be able to lose money before you can make money. Because again, remember, we're day trading, we're trading in, we're trading out. You're not going to be profitable on every single trade. Nobody is 100%. I know people on the internet will tell you that their strategy is 100% correct all the time, but it just isn't, right? Even the best traders in the world still lose money. But you see, the big difference between you and a profitable day trader is that a profitable day trader is able to manage their losses. They cut their losses off before they grow to the point where your losses eclipse your winners. If you win 5 trades and you make $100 on all 5 trades, but then you lose your 6th trade of the day and you lose $500 on that 6th trade, well, you just wiped out all the profits from all the trades before, and it's just not going to work for you. So you really need to focus on the idea of, first off, cutting off your losers, going into every trade with the simple idea of how much money could I possibly lose on this trade? Where is my stop at? If you're able to identify how much money you're going to risk, if you're seeing where that next resistance is, if you're seeing where you're going to cut the trade off at, if you have all that in mind, it's much easier to cut the trade off once it gets to that point. Because if all you can think about is how much money you're going to make from the trade, if all you can think about is how rich this one trade is going to make you, like I said, there's probably a much better chance that you're going to lose money. All I should be thinking about from the entry area is, where is my stop going to be? What is my risk? And where is my profit target? But I want to be focused first on my cutoff. I want to be focused first on my stop loss. Once I'm in the trade, once the trade is working out, it's moving the way that I want it to move, I can then start to think about, okay, where's my profit target? But the one thing that I've learned also is you don't want to become married to a profit target. It's okay to take partials. It's okay to get out early. Like QD, it went to $5 and it would have been a beautiful trade. I could have made a lot of money, but it could have went higher. You know, it's one of those things. Always coulda, shoulda, woulda, all that stuff. But you don't want to get into a trade where all you can think about is, okay, there's my profit target. The stock goes to $5.10. It shows support. It shows that there's buyers. It shows volume. Everything is looking bullish before it goes to $5. But again, all you can think about is a profit target. You have to have profit targets, but you also need to be able to adjust, you know, those targets and those ranges as the trade is happening. The same idea sometimes, I'll get into a trade and I just don't like the way it's moving. I don't like what's going on in that moment, and I end up getting out. And a lot of times I'll end up getting out right before, you know, either the stock goes much higher and I could have made a lot more money, but then there's gonna be those days where I get out at the perfect time where I'm just like, I don't know what it was. I just was looking at the tape. I was looking at the level 2. I saw everything that was going on and I was able to identify, okay, I gotta cut this one off. It's not working. It's not moving the way that I want it to move. And like I said, there's gonna be times where you're gonna get out of a trade early and it's gonna end up, you know, going to where you want it to go anyway, but you can't sit there and dwell on that. You really just have to be able to take profit when you got it. You got to be able to cut your losers, and you got to understand that every single trade that we go into, every single trade that you take, there is a chance that you could possibly lose money. And if you go into every single trade with that idea, it's going to be much easier to cut off those losers. Instead of letting your losers end up turning into massive account blow up losers, you're able to identify, okay, I got to cut it off. It's not working. I went into this trade with that plan. I had the plan from the beginning. I know what I need to do here, and that's really what it comes down to. You have to be able to lose. You have to be able to cut off your losers so you can take other trades, because if you blow up your entire account off one trade, you can't ever make any money. And that's really what it comes down to, being able to lose money to make money. You got to cut off a trade. Sometimes you just got to cut it off. You got to take the loss sometimes so you're able to take a bigger winner later on in the day or maybe tomorrow. Remember, not every single day has to be a green day. There's going to be red days. But the last thing you want to do is try to always battle back to a green day. That's one of the things that I used to do in the past, where I would have a red day and I would try to dig myself out of the hole, and before you know it, that hole just gets bigger and bigger and bigger. Again, simple idea here. You have to be able to lose to make money day trading. It sounds crazy, I know. Try it out. Think about it. Try it out. Talk to you guys later on.